Welcome to today's panel entitled The Marriage of DeFi and Centralized Institutions in 2021. My name is Rachel Wolfson, and I'm an enterprise blockchain journalist and analyst. Today's panel will consist of Brian Kerr, the CEO and founder of Kava Labs, and Chern Chung, the Senior Director of Global Business at Huobi Global. And I'll let them introduce themselves before we start the panel.
Thank you, Rachel. I'll go first. I'm Brian Kerr, CEO and co-founder of Kava. Kava is a multi-chain DeFi hub that's designed to provide financial services for the digital currency ecosystem. We've built a number of products from lending to money markets. And right now we're really focused on expanding the services from the technical audience that currently serves DeFi to a much broader retail base.
Right.
Great.
So
Sure.
I suppose I should take over the mic. Thank you, Brian, and thank you, Rachel, for the great introduction. And my name is Chern Chung, and to make your life easier, you can just call me Chern. I'm the Senior Director of Global Business for Huobi Global. So I'm currently leading the effort of expanding Huobi's business and partnership in Europe, MENA, and also Southeast Asia. And previously, I was more on business development. So prior to joining Huobi, I ran my own business consultancy firm covering East Asian market and also advising startups, specifically in Malaysia, because I'm a Malaysian. So Huobi is a cryptocurrency exchange. I would say from the volume perspective, it could be ranked top 3 in the whole world. And then our business spans across globally. We have offices all around the globe: London, Singapore, Hong Kong, North, South America, even in African continent. So we are expanding. So generally, exchange is our core business. And on top of that, there are still quite a number of branches branching out. And you can actually check on our different services that could be made available to users on our website. Yeah, www.huobi.com. Right.
Great. Thank you, Brian, and thank you, Chern. So the first question is actually going to be for Brian. Brian, as one of the world's leading DeFi platforms, Kava has launched on Huobi Global recently. What does Kava provide, and why is it different from other solutions such as MakerDAO or Compound?
Yeah, that's a great question. So similarly as Compound or Maker, which are DeFi applications, what we're building here at Kava is a full layer 1 blockchain that is designed to host many different applications. We spend all of our time at Kava Labs, years of our time and now millions of dollars of investing into bridging different blockchains together. That's our specialty, and that's where we put our focus. And we're doing that because currently DeFi applications are limited to the Ethereum ecosystem of assets. So this is ETH and all ERC20s. They can't really touch anything like XRP, HT, Huobi's token, even HUSD. There's no Bitcoin. There's kind of many of the top 10 assets just aren't even able to be used in DeFi today. So the work that we're doing is to create an ecosystem where all of that can be made possible, create the protocols and the primitives that have allowed the DeFi ecosystem in Ethereum to flourish, but now in this multi-chain paradigm. And then we really have a strong focus to expand those services to a much broader retail base, as I mentioned. Currently, DeFi is leveraged by those who are comfortable custody their own keys. They aren't your typical crypto trader that just has exposure and they trade passively or are active investors. They're more the technical folks who can custody their own keys on a ledger. They can assess the risks of DeFi. We're now making all of this possible, all of the yield farming, the borrowing, the lending, the earning with digital assets, accessible by just having one click away when a user is at an exchange like Huobi, or in the US at Coinbase or wherever they might be accessing their crypto. Through what we're building here at Kava, now earning with those digital assets will be just as easy as buying them.
Great. And in terms of making Kava unique and different from Compound or MakerDAO, what features do you offer that those protocols don't? So
the first is just the access of assets, like I mentioned. What can be used as a digital asset in Kava's DeFi applications, XRP, HT, you really can't use that in DeFi in any application available on Ethereum or elsewhere. So we're creating a very unique environment where all of that can be made possible. The second thing that we're doing that's quite unique is that because we're building everything from the ground up, it's a layer 1 blockchain. Every blockchain in existence has to make fundamental trade-offs between decentralization, throughput, security, liveness, and they trade off those things for what they want to do well. And you can think of XRP maybe did the trade-off for speed and low transaction fees. Solana is doing something similar right now. Ethereum is quite a bit slower, way more expensive, actually prohibits a lot of users to come onto their platform. Gas fees are so high. But what that enables them to do is create an environment where a lot of developers can generate ideas very quickly. What we've maximized things as we built the Kava blockchain from the ground up, we've maximized the ability to bridge to other blockchains with our trade-offs and our designs that we've made. And then we've also designed everything within the Kava blockchain to be 100% focused on only DeFi and providing a secure and reliable environment for DeFi applications to happen. This might be a little bit too technical, but it goes to as far as hosting a great place for oracles, never making gas fees something that makes it problematic for Oracle to post prices and update data feeds, which cause often liquidations and other things. It's responsible for managing people's collateral that they put into DeFi applications. If you have an environment like Ethereum, what we've seen is at $80 per data feed that gets updated on the Ethereum blockchain, often there can be issues where oracles just refuse to post prices because it's too expensive, it's too costly, and they don't have upside to do so. And that was actually a big issue with what happened with MakerDAO back in March of this past year. And the environment that we're building here at Kava really addresses all of that, but from a very fundamental layer one perspective. As I mentioned, the last part of the unique stuff that we're building is, outside of being really good technically and bridging assets and creating this whole environment, we have a huge focus both within Kava Labs as our greater community ecosystem partners like Huobi to make everything that we're building here accessible to people who aren't technical, but who still have demand for these services.
Right. Wonderful. Okay, Chern, the next question is for you. So why are DeFi projects like Kava important to the Huobi ecosystem, and how do they impact the broader blockchain and digital asset space?
Right, Rachel, thank you for the question. As we can see, over the past year, DeFi has quickly emerged as one of the most promising applications of blockchain technology. So one that has already started to transform the way both fiat and digital currencies are distributed and managed. As we move towards a truly decentralized economy, DeFi provides the underlying infrastructure for a wide range of crucial applications and services such as digital payments, Oracle networks, yield aggregators, crypto lending solutions, and much more. So as one of the world's leading digital asset organizations, Huobi is constantly looking to bolster its exchange ecosystem with strong DeFi projects, for example, like Kava. But our DeFi strategy goes far beyond exchange listings. So to help drive industry collaboration and adoption, we recently launched a dedicated division within the company called Huobi DeFi Labs. So it creates a global DeFi alliance consisting of an international consortium of centralized and decentralized financial service providers and platforms like Maker Foundation, Compound, and also Nest. We are also investing directly in the technological development of the DeFi space. So our new Ethereum-compatible chain, Huobi EcoChain, provides blockchain developers with an efficient and low-cost on-chain environment for decentralized applications, smart contracts, and digital assets. So I would say HECO, the Huobi EcoChain, the short form for that, is the first product launch on Huobi Open Platform. It is a unified blockchain infrastructure platform independently developed by our own technical team.
Great. And Chern, just adding on that, I'd like to know, what role do CeFi platforms like Huobi Global play for the future of DeFi and digital assets?
Right. Thanks, Rachel. So DeFi is exciting for many different reasons. So like its immutability, security, interoperability, as well as its potential to democratize access to financial products and services. But CeFi is just as important to the broader crypto ecosystem. So while we are betting big on DeFi, we still believe centralized organizations like ours will continue to play a critical role in ushering into a future where digital assets are a direct alternative to traditional fiat currencies. For example, we are seeing rapid growth in both spot and derivative trading volume. Last quarter, our spot trading volume on Huobi Global reached almost 10 billion daily average. So while our derivative exchange, Huobi Futures, saw even greater growth with 30 billion in daily average. So users around the globe still prefer trading on our platform because we have a proven track record. Being a centralized exchange allows us to provide consistency for traders, like the trust our users have come to expect from the Huobi brand. So some of the perceived advantages of DEX, decentralized exchange, include increased security, trust, and regulatory compliance. But these are also crucial aspects to Huobi's business model. So despite being centralized, our exchange have provided a safe, reliable, and compliant trading environment for users since the early days of digital assets. So in the 7 years we have been around, we have yet to experience any major security breach, and our exchange has withstood the stress of many high concurrency trading cycles. So these kind of set us apart from DeFi. We play different role, but we do think that CeFi and DeFi will coexist.
Right, wonderful. Okay, Brian, the next question is for you. So we've witnessed DeFi apps grow tremendously within the past year. Following this user demand, centralized institutions will play a role with the growth of DeFi. How does that play into Kava's overall strategy and growth?
Great, thank you, Rachel. We think about the overall growth of the DeFi ecosystem. Today, the majority of growth is coming from a very technical or savvy audience that could be broken down as developers, technical hobbyists who have tech jobs in their daytime, and then sort of the crypto funds or the people who are managing a lot of capital, and they have a huge reason to spend the time learning how to use these things, understanding all the risks, and then getting involved. That neglects 93% of the whole population that's involved in crypto today, where a lot of those folks exist on centralized venues that have made trading very easy. So Huobi, for example, any fiat on-ramp where people can trade their local currency for digital currency, that's also responsible for KYC and interacting with regulators and making sure everything's compliant. Those entities are the retail venues or the user aggregators for the long tail that is now moving into crypto very rapidly. With the advent of entrants like PayPal, Fidelity, with Square, and everyone else who is now making Bitcoin, buying like spot and selling spot of Bitcoin and soon other digital assets kind of on the fingertips of everyone, the next logical need is for putting those assets to work for all those users. And none of those users are technical. And right now we have the subdivide of the main venues are crypto exchanges today. So you have the sophisticated traders, and then you have the hobbyist traders who aren't technical in that regard. And DeFi is currently serving those technical people because they move their assets off the exchange and then they put them into the protocols and then they use them directly. The problem is, again, that doesn't address that larger 93% that is on the exchange today, but it also just completely neglects this new wave of people who are now finding Bitcoin and other digital currencies very interesting, as whether it's a monetary hedge against the global economy or because they find it as a good store of value, whatever it might be. The bottom line is that growth in digital currencies is growing really rapidly. And for the majority of people who are new entrants, they'll be coming in on these centralized venues. So from my perspective and from the Kava Labs ecosystem perspective, we're very happy that Kava is being used in very large amounts today by technical users. But the key areas of growth going forward are working hand in hand with exchanges like Huobi to make these products that are on the DeFi protocols or the DeFi applications accessible to that retail user base.
Right. I mean, it seems like CeFi platforms, centralized platforms, are going to play an important role with DeFi. But I'm wondering, what are the specific differences between decentralized platforms and centralized platforms in terms of implementation?
That's a great question. I think from a user experience, the centralized platform will probably be much more intuitive and akin to onboarding with an investment firm or a brokerage, maybe like a retail bank account. It's all the same sort of process to get involved, to create an account and then have access to all the services that are there. On the DeFi side, it's much more involved, where you need to understand the custody of the different assets, how you're going to manage that, how to audit the protocols that exist as software, and make sure that what you're interacting with is actually the protocol that you think it is, because there's a lot of, frankly, scams and other things that you can have the quote unquote rug pulled out from under you. So when it comes to the integrations and how users are using these things, I think there's just a lot more safety and security and trust that can be built up within the centralized, in the CeFi realm of things. The users build a relationship there, whereas they don't necessarily build a relationship with an autonomous protocol that's helping them yield farm. But that is something that is very useful to them at the end of the day. So how things will be developing and progressing is that users will continue to come onto these centralized platforms, but then they'll rely on the centralized platforms to audit and verify and choose the right DeFi applications that can bring them value, and they'll be integrating those on the exchanges directly. And that way they don't need to worry about scandalous projects or rug pulls happening to them. Their counterparty there is just the exchange that they're used to always dealing with. And I think that works out very well for the users. It works out well for DeFi because it'll gain access to more users over time, and everything in terms of the capital markets and the digital currency ecosystem that's developing will become a lot more efficient because there's just going to be more usage over time.
Right, definitely. And Chern, I just want to get your thoughts on this. As a CeFi provider, what advantages do you bring to the digital asset industry and the DeFi space as a centralized provider?
Right, gotcha, Rachel. And for Huobi, being centralized allow us to respond quicker to market needs and allow us to also launch new features and products at our pace and according to market pace. And also we can have a better control over token listing by filtering out like scandalous project. And then we will only allow a qualified token to be listed, for example, like Kava. So, but more than that, we also help to bring trust to an industry that's sometimes lacking on it. And the decentralized nature of DeFi projects make them challenging to vet, but we have a dedicated team, both on the compliance side and the technical side, that will always perform extensive due diligence on projects before they enter the DeFi ecosystem, especially on Huobi ecosystem. So this is one measure that we are taking as a CeFi provider to ensure the safety of our users and also their assets. There's another unique differentiator of Huobi is our focus on global compliance. So one of our core values is to provide users with a safe and regulated trading environment. So we hold ourselves to the standards of regulators in every market we operate in. So which means we work with local regulators to obtain the proper license to operate either directly or through trusted third-party partners. And we adhere to regulatory requirements to provide fully compliant services to our users. So we see this focus on compliance as one of our competitive advantages as a business, one that's only possible because the trust we've built with both regulators and users. And we also always see centralized exchange, like for example ours, as a bridge of the old world to the new world, because with only a compliant infrastructure, there will be more compliant players coming into the game and hence open up the crypto to the whole new market segment.
Definitely. And I think that it's pretty obvious that both, CeFi and DeFi platforms have advantages that work well together. So Brian, my question for you is, what can Kava bring to the CeFi space as an outstanding platform in DeFi?
Yeah, I think that's a great question, Rachel. I think for any application, whether it exists within a CeFi platform or as a DeFi application, they tend to try to find efficiencies. So in Huobi's example, they're trying to aggregate capital of their users to create nice and deep order books where it's very fun and very easy to be a good trader there in any size that someone wants to trade. Similarly in DeFi, it's an efficiency of capital game, but instead of doing it in a centralized venue, we use blockchain technology to pool capital together from many sources and many players all over the world, regardless of what jurisdiction they may come from. And what that does is it creates kind of efficiency of scale where the protocol itself, without any middlemen or fees, can provide better yields on digital assets, and through activities such as lending or adding these assets to a lending pool upon which borrowers can borrow, the borrowers pay interest, and then that interest goes back to the lenders in that pool. But you need to have certain size to make that work. And the larger the pool of capital that's available, the more efficient the whole process becomes. And what's beautiful about DeFi technology or blockchain technology is that it really just cuts out all the middlemen that would otherwise take fees. They would increase the rates. They would make the process slow, and a bunch of regulators would need to get involved because there's many counterparties. Instead, this sort of just becomes a peer-to-peer network where there is efficiency at scale, and it's all returned directly back to the users. So what that means for users at the end of the day is that for some applications and some activities, such as borrowing, lending, other forms of yield farming and earning interest, DeFi can provide them greater yields than what they could get on a centralized venue. And that's not always going to be the case. It's going to vary over time. There's a lot of things that are market dependent. And at least from what I'm seeing today is that while DeFi is providing superior yields right now, it's definitely something that's going to depending on the situation, better yields could be found elsewhere. There might be one-time business opportunities that you can leverage, and then you can access DeFi for the other times. And what we see in platforms like Celsius and a bunch of exchanges today is that they actually aggregate many of those different ways to earn yield, whether it's B2B lending through business to business activities, or if it's incorporating a DeFi application. What they're giving to users at the end of the day is almost like an amalgamation of all those different places that they're generating yield. And I think that that's going to continue to be the paradigm as things evolve further. As the integration that we're doing with Huobi for HBTC, we're giving their users the ability to earn more with Bitcoin. There's going to be other earning opportunities for Bitcoin as well. And it's up to the centralized venues to basically route their users to the best opportunities, so they can keep their users within the platform happy, well-fed and full of capital and earning opportunities, just like a bank does today with savings accounts and money market products and everything else. That's going to be the paradigm going forward for digital currencies. And I think DeFi plays a very important role. In many situations, it'll provide the best yields to those users, but probably often, especially as things develop, it'll be a back-end service, not necessarily the front-end applications that users are used to experiencing.
Right, definitely. And Chern, just based on what Brian said, as DeFi and CeFi continue to merge, what aspects and features of CeFi do you think will continue to exist in the future moving forward?
Thank you, Rachel. So with your question, it comes back to what is the real definition of DeFi. So true DeFi is meant to be censorship resistant. So there's certainly a limit to how much a centralized exchange can integrate without compromising its standing with regulators. So many decentralized exchanges have minimal AML and KYC procedures, but this is an area that centralized exchanges like ours simply can't compromise on. So KYC is a must for regulatory compliance, but they run counter to the promise of DeFi. So KYC protocols are meant to identify and censor the user, which could potentially break censorship resistance. So given this limitation, many DeFi protocols actually operate with a high degree of centralization. So there are also a growing number of KYC solutions designed specifically for DeFi protocols, but they haven't yet been tried and tested in the same way that traditional KYC procedures have. So our KYC protocols, for example, have been developed in collaboration with many different regulator and financial agencies. So being a centralized exchange also means we can filter, we can monitor, we can manage which transactions are permissible based on the transaction type, region, and jurisdiction. So this provides an additional layer of security to meet AML requirements. So referring to all what I've just mentioned, eventually it comes back to the belief that CeFi like us will play a key role, acting as a bridge that offers an extra layer of trust and confidence for institutional players in especial to come into the space, and through us, they will build the trust and confidence to enter into DeFi eventually. This is what we are hoping for.
Great. Brian, so my next question is, the DeFi space is still a bit isolated. It's still a bit unknown compared to the other, the blockchain sector and cryptocurrency. DeFi is very new. So I'm wondering what boundaries need to be broken in order for this space to actually advance and, have more users better understand it.
Yeah, that's a great question. I think there's been a lot of strong initiatives on the education front that have been very helpful, such as CoinMarketCap campaigns to educate people about, for example, what Kava is providing and how users can use it. However, I would say the majority of people are still grossly uneducated and unaware, as you mentioned, of what DeFi is. Some have heard of the term DeFi, but do they actually know what it means? Probably not. And I think that over the course of the next 2 years, the big education hurdles will be met by just a simple statement, which is earn using BTC. As more people are holding BTC, they're going to be looking for opportunities to earn with it, to put it to work, to generate returns over time. And I think that's where kind of the value prop of DeFi gets front and center and will become top of mind for any new participant. I do think, though, where the space is heading today, that there's going to be a lot of other areas that need to be addressed outside of education, both fiat on-ramps, accessibility, general user experience of DeFi applications needs to improve. There's many different areas right now, but I think at the end of the day, it's really all about, is this thing made accessible to that new base of digital currency holders? And do they easily understand it and grasp it, just like they would, say, a mobile app or any other thing that they might use in their daily lives? And as that becomes closer and closer and that bridge is gapped, I think then DeFi will become much more of a household name. There of course is this possibility that DeFi starts fading into the background, much like the financial services of banking. They're almost completely separate from the core banking services of retail banks today. They focus all their business on the core banking services, and then they pipe into technology companies that provide new financial products and make that accessible to their users. And DeFi may end up becoming that. It might just get wrapped up. And this is actually very similar to one of our projects that we're working on here at Kava, is we're wrapping all of our services in an API that then any application, whether it be a wallet, an exchange, or whoever that holds a bunch of crypto users, they can just integrate this one simple API, and it gives them access to lend, to borrow, to earn interest with all the digital assets that are there. That becomes much more like a Stripe model or a Plaid model than it does what DeFi is today, which is front-end applications that developers are interacting with on a daily basis to generate returns. And instead, it becomes more of like an enterprise financial service that these larger companies that actually have distribution and have many users all around the world, they can get access to that and then package it up and give it to those users in a seamless fashion. So I think those are the main areas: education, these integrations. Overall, just time will be very helpful. Only time will tell which one of those two paths will become a reality. It might be both. We'll just have to wait and see.
Right, definitely. And Chern, what do you think DeFi adoption will look like moving forward?
Right, Rachel. In our opinion, DeFi and blockchain in general will become more accessible to a wider audience. And while this is a positive step towards mainstream adoption, there are still some inevitable obstacles. A big concern is security. So the more layers, the more difficult it is to secure and audit the blockchain. So an attacker could take advantage of multiple DeFi protocols to manipulate the prices and profit off a decentralized exchange, decentralized leverage trade. So another challenge is that while DeFi aggregation products can lead the way for interoperability, some of the barriers to certain protocols could still be high. So if users can't take advantage of multiple layer tools and cross-share transaction, then that actually defeats the purpose of interoperability and DeFi aggregation products. So I would say DeFi is a nascent industry. So there are still many lessons to be learned. And I mean, from Huobi's perspective, our pitch is to continue to collaborate with all kinds of DeFi projects and to work on solutions to all these problems together.
Definitely. Chern, I'm curious, are there any plans in the work to bring these DeFi solutions to enterprise customers? For instance, PayPal, now US users can buy cryptocurrency on the platform, but if they want to earn on their BTC, do you think that that's going to actually be possible moving forward?
Right, Rachel, absolutely. So to answer to your question, I would like to bring it. I would like to bring out one of the advantages of using Huobi again, which is customer service and reliability. So DeFi is currently offering a very lucrative yield. So, however, bear in mind that risk is involved in attaining those yields, and it is also relatively high. I mean, in regards of the risk, and everything is code based, and everything is at your own risk. So for a newcomer, it's very tricky, and especially for enterprise customers who want reliability and safety, it could be also a challenge for them to accept this kind of high-risk product. So Huobi has already been contemplating to become the go-to spot in relation to all crypto-related products. And for sure, we have already actually enabled our users to enjoy the benefit of DeFi via our platform. So currently on our exchange, you could already find an earning tab where users could deposit in various type of tokens, stablecoin to generate yield. And then as what Brian mentioned, we are also working with different chain, enabling our users, for using our wallet, acting as the so-called like swap, as the bridge to bridge the users, to bridge their assets to different protocols for them to generate yield there. So I would say we are serving more or less like a bridge and like an aggregator whereby we will ensure yields are consistent. Of course, because Huobi as a platform will ensure the safety of the assets, but at the same time, it gives you a peace of mind with lesser risk, and of course, a slightly lesser return compared to what compared to if you are doing it by yourself directly on the protocol. So in a nutshell, to answer to your question, Rachel, yeah, definitely. We have already enabled this kind of service and to allow more revenue, allow more avenue for users to generate yield from holding BTC or any other assets on our platform.
Something I'll add, since you touched on it, Chern, is that centralized venues like Huobi are becoming the primary custodians of Bitcoin and these major digital assets all around the world. And a lot of people expect technology developments like IBC, which will bridge all the blockchains together, to not necessarily need to have that to make it possible to use, say, Bitcoin in a DeFi application on another blockchain. However, I take a very different stance, because no matter what you do with Bitcoin on the Bitcoin blockchain or the Bitcoin network today, just to do a transaction can take 30 minutes, and to do a cross-chain transaction where you combine many transactions together, it could be, to the tune of a few hours to make sure that that gets done safely. That is just a poor user experience no matter how you look at it. Whereas if that Bitcoin is already on an exchange where a user or a company or an enterprise has deposited there, and they're custodying the funds with Huobi, the beautiful experience of, for example, what we're doing together with HBTC, Huobi's custodied Bitcoin, is the moment they hit the withdraw button from Huobi, they don't need to wait for a transaction on the Bitcoin blockchain to go through before they can use Kava directly. They can instead just have Kava's wrapped version, HBTC minted on Kava, happen in 7 seconds, and then they can be off to the races and using it right away. So I think just from a general UX, centralized venues, as Chern mentioned, with doing these swaps or creating this aggregator of assets and enabling users to take it and move it to whatever chain that they find useful, I think that is just going to be a very strong improved UX from what exists today, and probably will stay that way for the foreseeable future. I don't see anything on the horizon that's going to change that paradigm. I only see things that are going to make it stronger and stronger over time as people get more and more demanding of UX that involves blockchain.
I also just want to add to that I think in terms of regulation, centralized exchanges really help in that regard, because right now DeFi is gaining so much attention that regulations are starting to come into play. But my question for both of you is, for instance, with the SEC, they're looking at DeFi and thinking about regulations. That's still an intermediary coming in, but this is supposed to be decentralized finance. So what are your thoughts on an intermediary like the SEC coming in and trying to put regulations on DeFi?
Who should go first? I can take a crack at it.
Yeah, go ahead, Brian. Yeah.
I think that what is the likely development of regulators coming in is that, well, from if a protocol is truly decentralized, the regulator doesn't have much to work with or much to target in terms of creating carrots and sticks to make behavior fall one way or the other. Instead, their fallback, because they can't go after the protocol, it's just software running in the cloud. Their fallback is they have to regulate the users themselves. And for the technical audience, that means that they're having to fall under regulation, often because they're single individuals or small organizations. They're really beholden to be self-regulated. They have to do self-reporting and do their own compliance to make sure that they're beholden to whatever regime is currently within their jurisdiction that they're operating. Or it's larger venues that have the responsibility to work with regulators on behalf of their users. And I think that's where a player like Huobi will do a great job going forward, because they're already working with regulators in jurisdictions all over the world. So as those regulators move in and their purview expands to that of DeFi, I think their main point of contact will be a centralized venue like Huobi, and then having those discussions actively with them to help evolve that conversation and come up with what is the appropriate compliance and regulatory regime to put in place.
Definitely. Chern, did you want to add to that?
Yeah, I think from a centralized exchange perspective, what we could see is that we could actually smell there's a sense of urgency. There's also a sense of like a desperation for regulators to really chip in and then trying to do something. I personally think is that they are trying to do something, but they still yet have a very clear clue, even in terms of coming out with those rules and regulations statement. Even I think it's very tricky in terms of trying to define a lot of terminology in DeFi. For example, just recently SEC trying to regulate decentralized wallet. And then also in Singapore, the MAS trying to regulate facilitators in digital assets. So facilitating is a very wide description. So how are you going to define who should be regulated, or even technological partners, they are just facilitating, but do they have to be regulated too? So there's still a lot of, I guess the regulators are still pretty much in the cloud. And that also being said, we who have the experience or who have a little bit more knowledge compared to them should also trying to be helpful to them in a way. So this is what Huobi has been trying to do too. Like we are very open to regulators, and sometimes we actually in very close communication in helping them to shape out the rules and regulation.
Yeah, that's great to hear. I think it's becoming increasingly important, especially because we're seeing more institutional interest in DeFi now. For example, Grayscale just announced that they may be adding support for some of these DeFi protocols. I mean, I think that's huge because once you see institutional interest, obviously it shows the impact that DeFi is making on the entire blockchain and crypto space. So I think that, having clear regulations in place, it's important and it's coming. I don't know if you guys want to add anything to that with institutional interest, but Brian, what do you think? Do you think that we're seeing more institutional interest in DeFi?
I mean, I think the Grayscale development is very positive overall for the space. And the thing I try to emphasize whenever I think about DeFi and its importance growing over the past year is really before 2020, every crypto asset was highly correlated with Bitcoin. No matter how you looked at it, it seemed that the correlations were very high and you were hard pressed to find an asset that wasn't. After the advent of DeFi, after the advent of compound growing, players like Huwei and then Kava showing up, that has changed drastically. And now there's a big divergence amongst both the crypto assets themselves as well as the whole space. And that's why there's a huge flood of capital that comes in the form of now stable coins because it's getting deployed in these DeFi applications. And it's kind of dislodged the whole correlation from Bitcoin and the rest of the space and now made, and I think it's very appropriate to have something like there's a Bitcoin ETF, but then there's also like a DeFi ETF or index that follows all the developments there because they're really addressing two fundamentally, while using similar technology, they're addressing two fundamentally different problems. One is trying to solve global payments being censorship resistant as a store of value, whereas the other is trying to provide open financial services for anyone, anywhere in the world. And it actually has very little to do with Bitcoin unless someone who holds Bitcoin wants to earn using those applications. So I think it's very appropriate. And those developments that you mentioned are just bullish for the whole space overall, especially as it regards to institutional money coming into the space.
Definitely. Chern, did you want to add anything to that?
Yeah, just another few more like short sharing about how DeFi actually changed the whole perspective of institutional players towards the space. And when it comes to institutional players, what I mean is like new institutional players. So back then, a lot of people, I'm not trying to provoke anybody, but a lot of people claim that, oh, there's no fundamental in this and that, BTC, there's no fundamental. But now with the advent of DeFi, so actually we do have a product to show people. So that's the fundamental. We do have a protocol that's actually facilitating the whole facilitating and also make the whole process more efficient. So that's the fundamental. So this is how it can actually attract more people to come to the space. So I agree to Brian, what he said, that you will be having a very separated scene where partially speculators are focusing on digital gold and the other part is really coming in for the tech itself. Yeah,
definitely. Yeah. And I think my prediction is because I know a lot about enterprise blockchain. So I think that we're going to start seeing enterprise interest in DeFi now. I mean, we already are seeing that it's enterprise DeFi, but they're going to start looking at these DeFi protocols and figure out how can I tokenize invoices based on what these DeFi platforms are doing. So I think, we're seeing the institutional interest, we're seeing the enterprise interest, and the DeFi sector is just going to evolve from there. It's just going to keep going up moving forward.
Yeah, it's been really interesting to see whether it's Tesla, holding some of their treasury in Bitcoin, or the old PayPal news, and Fidelity's been making inroads, and now JP Morgan has announced that they're going to do a huge initiative towards crypto, and they're educating all their people internally on it so they can sell it to their clients. I think all of this is just a big bellwether for if you are a global enterprise of any shape or size, it could make a lot of sense to interweave both digital currency or digital gold, Bitcoin, into your treasury strategy, but then also consider how do you actually use that in a treasury strategy, which is put it to work in different ways and earn returns on it. And that's where DeFi plays a huge part. So I think over time, that's just going to continue to mature. More players are going to continue to get on board. And then, as you said, the technology then has a lot of eyes and interest, and DeFi is rapidly evolving. There's a new product every week. And I think things like invoice factoring and other really burdensome processes that these enterprises have to do that operate on a global scale, they're going to find a lot of value with DeFi applications going forward.
Definitely. Great. So I think that kind of completes the questions that we have for the panel. But Brian and Chern, did you want to add any additional comments?
The main thing I want to highlight is that very shortly we will be launching a product collaboratively with Huobi. They are enabling HBTC, as I mentioned, to be minted on the Kava chain, where then it can be used, well, it will be used on the back end in our DeFi applications, allowing people to earn more with their BTC, but it'll be presented to Huobi users in a very simple one-click subscribe fashion, where they just specify how much BTC they want to put to work, and they'll get access to the returns from doing that. So I'm just really excited. It's one of the first integrations like it around the globe, and I expect the adoption, given the size of Huobi and the possibilities of people earning with Bitcoin that they didn't have before, I think the adoption is going to be very high. So that's the main thing that I want to highlight here, and for people to look out for in the days to come. And then, given the success of that product, we do plan to expand it to Huobi's other ecosystem assets like HT and HUSD going forward. So users of those assets can earn returns once those implementations are put together and made available to users.
Right. To add on to what Brian has just mentioned, we will give our full support to Brian, to Kava, and then, of course, have to give appreciation to Brian, to Kava for offering another extra avenue for our users to actually make full use of their assets rather than being parked on a central exchange, whereby they could actually utilize that to generate extra yield. And this is actually some good news for our users too.
Wonderful. Exciting things to come. Thank you so much, Brian and Chern. This has been a wonderful panel. And thank you again for having me host it. It's been a wonderful time. Thanks.
Thank you, Rachel. It's been a pleasure.
Right. Thank you, everybody.
Thank you.